Welcome to the Be Smart podcast, how not to be an idiot with your money. Jared, how you doing today? Let's catch up a little bit. How was Philly?
Philly was good. Met with my new agent. Had a great conversation, great dinner. Met with a couple other folks. I met with Eric Balchunas of Bloomberg. He's the ETF guy there. We've been friends for a long time. I got a ridiculous blister on my foot walking around Philly. It's about like this big and it hurts. So next time I got to wear a different pair of shoes. So
You get any cheesesteaks there?
I didn't have any cheesesteaks. You know, I had a lot of room service. I was busy working on stuff and I just stayed in my room and worked, and I ordered room service 3 times. I just lived out of my room. So
That's the way to do it. Nice. That's absolutely the way to do it. Ready for some market headlines?
Yeah.
All right, our first one. NVIDIA commits $500 billion to AI infrastructure build-out in U.S. will bring supercomputer production to Texas. The chipmaker's announcement follows commitments from big tech firms to bring manufacturing to the U.S. as the Trump admin pursues aggressive tariffs that could have massive cost implications for global tech supply chains. I guess I don't want to give Trump too much credit here because honestly, I still feel like he's kind of winging it so far. But at the same time, since he took office, Apple has committed to investing $500 billion in the U.S. over the next 4 years. TSMC has committed to spending $100 billion over a similar time frame. Microsoft $80 billion in 2025, and Meta has said the company will spend up to $65 billion in 2025. I guess my question would be, is the Trump effect starting to, sort of come into play here with these tech players? And do you see this as a bullish development?
Yeah, I mean, this is the Trump effect. He wanted to reshore manufacturing. In this case, this isn't manufacturing, except for in the case of NVIDIA. Well, I guess Apple too. I don't necessarily see this as a positive development. I mean, I think I read an article last week or the week before that said if you had iPhones manufactured in the U.S., they would cost $2,000. I mean, everybody has kind of known about this problem for a long time. Let's just using Apple as an example. I mean, they use Foxconn to manufacture these phones in China. Everybody knows that Foxconn is, I don't want to say slave labor, but very cheap labor. And this enables U.S. consumers to buy iPhones for $1,000, $1,100. If you do that in the U.S., they're going to cost twice as much. So the longer this goes on, and by the way, like, look, I was happy that Trump won versus Kamala Harris. I did not like Kamala Harris. I think she's a ding dong. And I think there are some positive things that have come out of this. But from an economic standpoint, this is a bag of shit, right? The tariffs are a terrible idea. There's actually talk about raising taxes on millionaires on high incomes to 40%. I didn't vote. What I was about to say was this is not what I voted for, but I don't vote. So, but can you imagine if you were somebody like me and you did vote for Trump and then he raises your taxes? Like, this is, it's terrible. So I'm not super thrilled about what's going on. And NVIDIA, like, their stuff is super it's just, I disagree with it fundamentally. So
Yeah, NVIDIA's down pretty big today, over 6%.
the whole market is down.
Yeah.
So today's Monday and stocks are down about 3%, and it's kind of creepy because it's very quiet. This is a very quiet 3% sell off. So yeah, this is actually, and I'll say in the podcast, like, as of the weekend, I was bullish. I thought stocks would go up this week. I'm wrong. Like, I've been at least I'm dead wrong on this for like one day. So we'll see.
Well, I think a lot of it might have to do with our next headline, which is Trump's push against Powell is latest reason to sell U.S. assets. The dollar and U.S. stock futures dropped on Monday due to concerns that President Trump will fire Chairman Jerome Powell of the Fed. As Trump recently said,
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. We have a Federal Reserve Chairman that is playing politics, somebody that I've never been very fond of, actually. The Fed really owes it to the American people to get interest rates down. That's the only thing he's good for. I think he's terrible. He puts us at a disadvantage to Europe. I mean, he plays right into their hands. If I want him out, he'll be out of there real fast, believe me.
Jesus. First of all, can Trump actually fire Powell? And if so, who would replace him? How do you see this sort of rivalry that's shaking out going?
Well, I don't know the answer to the first question. I don't know if Trump can fire Powell. Powell has demonstrated through his actions and inactions that he's kind of a political hack. You know, the Fed cut rates right before the election. Everybody knew why. It was kind of an open secret. They wanted to get Kamala elected. They did not want Trump in office, right? And here we are in the middle of a crisis, the magnitude of which is approximately equal to what we went through in the pandemic, and we haven't cut rates at all because Trump is president. Trump is right to be angry at Powell, okay? And I'm saying this as somebody who knows that Trump always wants lower rates. He's basically Erdogan in Turkey. Like he's an authoritarian. He always wants lower rates. But in this particular instance, he is right to be angry at Powell. Can he get rid of Powell? I don't know. I'll answer your second question. Who is he going to replace him with? He's going to replace him with Kevin Warsh. Kevin Warsh was on the board of governors during the financial crisis. He conducted himself very well. He's been hanging around with Stan Druckenmiller, writing op-eds in the Wall Street Journal. He's a super smart guy. I've seen him speak a bunch of times, and he would be terrific. I don't know why he wants the job. Why would you want to be Fed chair when Trump is president?
We got to talk about gold next because it's pretty hard to ignore at this point. I see it's now north of 3,400. So it hit its record as the dollar sags and the trade war continues to persist. A couple quotes I want to address here. First, from Trump on Truth Social, in all caps, of course, naturally. The golden rule of negotiating a success. He who has the gold makes the rules. And next, from your recent article on Reason, gold tends to rise when governments mismanage finances and fall when they act responsibly. If gold keeps climbing despite efforts to cut the deficit, it suggests that markets have little faith in those efforts, and that should concern us all. What are your short and long-term predictions on gold? And can you explain your quote regarding your concerns?
Well, gold is most correlated with budget deficits more than anything. And we're, 6 months into Trump's, no, not 6 months, about 4 months into Trump's term. And Doge has cut like 150 billion, 200 billion, which is a lot less than they expected. Spending is actually up under Trump. So, like, the outlook for the deficit is bad. Plus, Trump is, he said he's going to cut taxes for people making under 150,000 a year, like eliminate income taxes, which is going to cost 600 billion. So, the outlook for the deficit is not good. This is what gold is looking at. Gold is an option on debt monetization. Anytime the probability increases that we will have to monetize the debt, gold goes up. And what gold is telling you now is that we are getting closer to checkmate. At some point, we're going to have to monetize the debt. So, and I kind of run around with a bunch of technicians and traders and stuff like that. And I think there's sort of a reflex to buy something when it's down or short something when it's up, do the mean reversion thing. And you just can't do that. Like this is an unstoppable trend. And I say unstoppable for my friend Peter Atwater because he says whenever the word unstoppable comes out, that's usually when the trend reverses, right? But people have been like the guys I run around with have been trying to short gold for like the last 2 weeks, and I'm like, guys, like it's not working. The trend is not unstoppable. I do think there will be a point where it's going to pause or correct sometime in the next couple of weeks. And it could be a big correction because the higher gold goes up, the more volatility is expanding. So gold has been routinely having like 3% days. Like the chance that we could come in and gold is down like 6% is not zero.
Right. For our main topic, the options masterclass, this is our last call. This is less of a main topic, more so of a final heads up. So normally we record our episodes on Monday and release them on Thursday, but we've gotten a lot of feedback from listeners, and my hope is that we can start turning these around much quicker and getting them out on Tuesday. So tomorrow is the last call for this special price offering of the options masterclass. And Jared, do you have any final pitches here for the options masterclass? I mean, it's going to be doubling in price here after midnight tomorrow.
Yeah, don't miss it. I mean, look, we've sold, I know how many we've sold. I don't want to say on the podcast, but it's a lot. And the only piece of negative feedback we have gotten is from a guy who found a typo. Okay.
Oh,
Like,
shit. My bad.
no, it's not. It's actually my bad. It's actually my bad. It was something I screwed up. So that's the only piece of negative feedback we've gotten. People have talked about how much they've learned, how unlike any other options book, it's written in plain language. It's easy to understand. Like, I mean, you asked me to pitch it. I can't, I don't know what to do. Like, I can't sell it anymore. Like, it's like, if you don't know about options, I mean, you could, hang on a second. Okay. So this is how most people learn about options. Okay. In grad school, in a derivatives class. And this is the whole book. Okay. So I'm going to open up the whole book. We have Ito's lemma. We have a one-step binomial model. We have upper and lower bounds for option prices. Valuation of interest rate swaps. I'm going to find the.
All of which is over my head.
This is the type of stuff you usually find in a book about options. Okay. Not in our options masterclass.
No.
Shit can this thing. Get rid of it. And you get to learn about it in just plain language, and it's taught very intuitively. You will understand it, and then you can apply your knowledge. So
yeah, and if you're on the fence, it's going to go from $2.99 to $5.99, and $5.99 honestly is still a pretty good deal.
Yeah.
I remember when we were talking on a recent AMA, you were like, I want to charge $1,000 from this. So much work has gone into it. Just a special thanks to everyone involved in the creation of it. Laura, Sam, Rachel, Boyan, Connor. I'm sure I'm missing some people, but just so many people put so many hours into this. So check it out before it goes up. Let's go over to the week ahead. President Trump's policies will remain in focus while a slew of S&P 500 companies are expected to report quarterly results. So we have results from Alphabet, Tesla, Chipotle, Boeing, and Verizon. Ultimately, though, it's kind of a quieter week on the economic data front, with updates on activity in the manufacturing and services sector, as well as consumer sentiment headlining the calendar. Jared, I've been kind of on a bit of a Chipotle tear lately, pounding burritos, but is there anything more serious that you're focusing on this week?
Well, you mentioned Tesla earnings. I think Tesla earnings are tomorrow.
Yeah.
The chart, I follow DeMark indicators. It's a DeMark 13 buy on the chart. It's an unambiguous buy signal on Tesla. And as Tesla goes, usually goes the market. I am, at this point in my career, a little bit too chicken to be buying Tesla before earnings. But if you're not chicken, like the stock is down 50% from the highs, sentiment is in the toilet. Like this, if there was ever a high probability setup, I think this is it.
So you got a busy May here lined up. You got your Dirt Nap conference coming up, a writing retreat, and then your DJ gig in Vegas. Can you talk a little bit about your writing retreat? Did you mention you're going to Oxford, Mississippi, or is it Meridian?
Oxford.
Oxford. What are you hoping to accomplish there?
I'm hoping to get the Awesome Portfolio book done, which should take me 2 or 3 days, and then I'm hoping to get a good chunk out of my new novel done, which right now the working title is Inflation Fighter.
Can you give us a brief synopsis on it?
No, I can't. No, I don't want
Top
to.
secret.
Yeah, it's top secret. It's cool though. It's cool. So I talked with my agent about it when I was in Philly. He's excited about the plot. So this is, this is kind of new for me. I've typically written literary fiction, or at least, tried to write literary fiction, and I'm just totally switching and going straight commercial fiction now. Which is on one hand going to be nice because I don't really have to agonize about the prose, but I really have to think about the plot, which is something I really haven't had to do in the past. So it'll be fun.
You got to let me know how that goes because I'm actually considering doing something similar in the fall along the North Carolina, South Carolina line. What else we got here? You watch the NBA at all?
I have not been. I've been once baseball season starts, I'm watching baseball. But
All
I know
right.
that I know that the playoffs started. So
Yeah. I was hoping to discuss a little bit, but I'll have to hit up Chris Riley over at Risk Edge. He's the only other guy I know who really watches the NBA.
I do up until April 1st, and then it's baseball time. So, and besides, my team is the Hornets. They don't make the playoffs. So,
Nope, never.
yeah.
All right, let's bounce out of here. Jared, thank you for your time. I'll talk to you here soon. Everyone, please like, subscribe, and drop us a comment. We will address any comments and questions that you leave us. Until next week, later, Jared.
Later.